Good morning, guys. This is a quick voice check. Let me know if you guys can hear me okay. We'll be beginning in around 2 minutes. So grab your drinks, grab your refreshments, get comfy. This is going to be a quick stream. Probably be talking a bit fast. So yeah, apologies in advance. Alrighty, so with that, we're about to begin. Let me just make sure I've got my drink here. It's actually just water this time, guys. Alrighty, and good morning, everyone. My name is Sean Dex, and I welcome you back. To the Mango live stream. Now, this is going to be a quick live stream where we do a quick overview on Bitcoin, what I'm seeing on Bitcoin, the interesting things, the good, the bad, and the ugly. But before we do that, I want to wish all of you a happy Valentine's Day. I love every one of you. Man, it's been a long, awesome journey over here at Mango, and I'm looking forward to many more Valentine days with you guys to come in the future. With that, we should be beginning soon because I don't want the stream to be one of the longer ones. I'm trying to keep it underneath 20 minutes. And yeah, let's just jump right on over to the dash. Oh, before I do that though, let me say my hellos and my good mornings to each one of you right here. Julian, how's it going, man? Emery's, how's it going, man? Paulie's in here too. Angela, how are you? Krisha's in here. Hey, my beautiful, my gorgeous, my one and only forever Krisha. Chauvin is in here too. How's it going? Tan is in here too. And Sherry, you made it. It's midnight in Australia. Thank you for showing up nonetheless. And Philippe is in here as well. All right, guys. So let's go ahead and get started, because I'm pretty sure Bitcoin is confusing a lot of you. Bitcoin's probably boring a lot of you, but I think it's time. It is the time to be paying attention to Bitcoin, because I'm getting this gut feeling. That's the things are about to go ape shit, for the better or for the worse, right? So pay attention to Bitcoin. Okay, so here we are looking at the Mango view. You guys can follow along at app.mangoresearch.co, or just follow along over here, because we are live. Anyways, what we are looking at over here, guys, is the weekly chart on Bitcoin, and I'm going to go ahead and turn on the automatic weekly support and resistance lines along with the 4-day support and resistance lines in a quick bit. Before we do that, I want to talk about what's going on right on top over here, right? We have the US 10-year yields being marked out for us. We have the US 30-year, we have BTC and Bitcoin dominance. When we put these up over here, okay, back all the way in, I think August, or was it October, people were a bit confused as to why we were talking about this. Now you guys are seeing that it's the talk of the market, right? Everyone's talking about yields, everyone's talking about the bond market, etc., etc. Okay, we were preparing ahead of time for all of this to come. Okay, we're seeing all of this play out now, and you guys are sort of well prepared too in terms of your knowledge as to understanding why the rates are important, how it affects the markets, how it can apply pressure on the markets, etc. One of the key numbers that I was looking at for a very, very long time in regards to US 10-year yields is the 2% mark. Okay, breaking over the 2% would have been kind of aggressive, to say the very least, for the risk assets, and we talked about why, etc. In prior videos and prior months. What's important to note though is that with all the hype in regards to rates increasing, the 10-year smacked up against that 2%. I'll show it to you guys I'll show it to you guys quickly right now. Do I have it here? Yeah, I do. Right here. The 10-year hit the 2% mark and saw resistance. You guys, I can actually, TA works even in the bond market. TA works, period. You guys can see how your clear support and resistance lines over here, resistance at the 1.99% mark, coinciding with the 2% psychological resistance level. We smacked right up against it and saw resistance, and essentially bonds started getting picked up, right? Bonds caught a bid. So bonds are rallying at the moment, okay? This is really, really important, because what the rates do is likely going to dictate what the markets do in the midterm as well as in the long term. Rates essentially breaking up and making highs above around 2.5 to 3% is going to likely mean a lot of pain for all risk assets in the mid to long term. At the moment, however, rates seeing resistance is likely going to mean a relief, so to speak, for risk assets. And this is going to be really, really important, because this weekly candle over here, guys, on the rates is coinciding with a potential temporary reversal at the very least that I'm looking at on SPY as well as Bitcoin. As I say that though, we're seeing bonds actually sell off a little bit more. We'll come back to this in a bit. But I think that we could see this come down over here, all the way down to 1.7, perhaps even lower, down to 1.6.5%. What does this mean? If we are seeing rates come down, it means that bonds are getting picked up. It means that the markets are going to feel a little bit more confident in terms of the risk assets, etc., etc. And that's where we can come back to Bitcoin over here. I'm going to switch back to the Mango view, right over there. Okay, cool. So Bitcoin. This is a very, very interesting picture over here, guys, because we had a really, really ugly weekly candle. Okay, you guys can see right over here. But the week opened up with something interesting happening today that I do want to talk about, that might indicate a bull move, at least in the midterm, and we'll get to that very, very soon. Before we do that, I want to get the levels clear for us, right? What's happening in terms of support and resistance, and in terms of trend, okay? Support and resistance and trend. I'll first start with the weekly support and resistance lines, and you guys can see that we closed right underneath the weekly resistance line, right? right over here at around what's that, around 43,000-ish dollars was the weekly resistance line. We closed well underneath it. Now I'm going to turn off the weekly support and resistance. I'm going to turn on the 4-day support and resistance lines, and you guys can see that while we are underneath 4-day, while we are underneath weekly resistance, we are above 4-day support, right? So it's a battle of time frames at the moment. You gotta zone in on which time frame you want to play, because if you don't do that, you're likely going to get very, very confused. Unless you are an experienced trader, this is not the time to be multi-time frame analyzing and trying to put on trades at the very least. You can use your multi-time frame analysis to practice over here. This is a great time for that, but I would recommend, if you're putting on trades, keep it simple. Okay, pick one of the time frames, and if you're playing this, you're playing 4-day, you're like, okay, according to the dashboard, or maybe even your personal support and resistance lines, the 4-day is saying we are above support, right? So the next resistance line on the 4-day is only all the way up at 53,000. It's one of the levels that I've been talking about for a while. On the weekly, however, let me go ahead and turn it on. We are still underneath resistance. So this is not the time that you'd want to be longing if you're playing the weekly time frame, right? So choose your time frame. It's really, really important, because if you try to use everything at the same time, it can get confusing. And unless you have a methodology of using multiple time frame analysis, it can get very, very confusing. So again, weekly, underneath resistance, 4-day, we are above resistance, essentially support. Okay. Now, another thing I do want to note on the weekly time frame, actually, we'll come back to this in a. Okay, I'll do this right now. I'm going to switch on over to the trend analysis part of the dashboard now, guys. The actual trend, and we are looking the trend calls, right? We're looking at the daily time frame. It looks like the daily has been long for a good 8.5 days, but the returns have been pretty shabby, around 2.5%. Okay, so the daily is long. What's interesting though is the trend direction according to the dashboard. The daily is long. The weekly, however, is short, and it's been short for 70 days. It essentially has been saying that for the past 2.5 months almost now, the weekly time frame has been in a downtrend, and the returns on this are it's not shabby at all. It's around 15%, considering Bitcoin has bounced a good 20%. The returns on this short call was pretty darn good. So how do you evaluate this? The daily is saying long, the weekly is saying short, right? How do you evaluate this? Well, the weekly, in my opinion, rules all. Okay, the weekly and the 4-day, the higher time frames are going to always be more important than the daily time frames. What that's essentially telling you, you guys can use trend calls as resistance and support as well. Okay, if the weekly is saying short, and the draw it out in your heads like this: weekly is saying short, daily is saying long, it means that I have weekly resistance on trend, right? Because the weekly is applying downward pressure on the daily uptrend. What does that mean? It means that if there's an uptrend, the weekly may smack it down at any time and push the daily into a downtrend too. Okay, so we have weekly as a short trend, daily as a long trend, right? I'm going to show it to you guys. Daily as a long trend, and now underneath that, you guys can look towards your lower time frames underneath the daily, the 4-hour, the 12-hour, right? Let's use the 4-hour to get a proper divide, right? Weekly, daily, and 4-hour right over here. Okay. What's the 4-hour saying? Ooh, the 4-hour saying short. Now it gets really, really interesting, right? Really, really interesting, because you have the weekly saying short, the daily saying long, and the 4-hour saying short. So we have pressure now on the daily long trend from two directions, from the high time frames and the low time frames, right? So the daily really, really needs to prove itself over here. Volatility too on the 4-hour is at 2. Literally begging people to short this asset in terms of the high time frames as well as the lower time frames. Draw in all the shots to push the price down, because vol is really low. Volatility could spike, giving people some good profits. This is where it gets really interesting though, okay? And again, don't get too carried away with this though, guys. Remember, this is only one part of the picture, one part of a much, much bigger picture. Okay, and again, we've only talked about the weekly here. We've only talked about the weekly, the daily, and the 4-hour so far, right? We also have the monthly to this is a trader's market, guys. This is a trader's market. Okay, so now I'm going to switch on over to the charts. Okay, right. Okay, I got it right. Okay, cool. So here we're looking at the 10-year yields. We talked about this a little bit too much, more than I intended on. Let's switch back on over to Bitcoin. I'm looking for the weekly, but I do want to quickly show you guys the monthly and show you guys that, remember how we had we talked about how we had weekly resistance according to the dashboard. Well, we that confluenced with what? It confluenced with one of our biggest decision factors as to whether we're going to get ultra bullish, is the monthly 10 SMA, right? Monthly 10 SMA smacked up right up against it and got rejected. If you guys remember last week, all of you who remember last week, what was I saying? I'm like, I'm going to be cautious over here. I kept saying that over and over again. I'm going to be cautious, guys. It was in the duo video with Krisha too. Why? Because monthly 10 SMA resistance, it was our pivot point, right? It was our point upon which we got bearish for this down move over here on Bitcoin when the year opened. When we opened Jan underneath the monthly 10 SMA, we were like, okay, we're coming down to the Tenkin Kijun juncture. Simple trading strategy. Simple trading strategy that we've been using for freaking years now. Close underneath the 10 SMA, look for this juncture to be met, okay? We got that move. Now, the same thing applies towards the upside. So when we came up against a monthly 10 SMA, you look for it to be resistance until it clears. Resistance is resistance until it actually flips into support. So monthly 10 SMA, but more important, guys, we also had the weekly Kijun coming up right over there. See how that smacked up against that, guys? We see monthly 10 SMA, weekly Kijun, and also your weekly dashboard, right? Your weekly dashboard, also has resistance, okay? So if you're playing your weekly time frames or you're playing your monthly time frames, if you've isolated on your weekly time frames, you have so much confluence on that, right? You have, okay, if this is how you see, this is how you play it. You're like, okay, my time frame is the weekly time frame. My weekly time frame is saying I have resistance. Now you look for everything that supports that claim of weekly resistance. You have monthly 10 SMA, you have weekly Kijun, you may have other things too, and all of that is strengthening your time frame. Now there might be another time frame that you're looking at, the 4-day, but that's not your concern. That is there to add the bear case to your, or rather the bull case to your bear thesis, but that shouldn't let you change your decision, because your deciding time frame is the weekly. That's your pivot time frame, right? I'm talking about this because I know a lot of people are getting confused as to which time frames to be playing when you're playing multi-time frame analysis. Once you decide on your time frame, that time frame is your starting point. Everything strengthens that time frame. You do not make any decisions on another time frame. Okay. So weekly has Kijun, has monthly 10 SMA. It has dashboard resistance as well, and we're going to switch back on over to the charts now, and this is okay. Now this is where it gets really interesting. This is what I'm going to do, guys. Okay, this is what I'm going to do. I want you guys to notice the prior week. Okay, this is where your candlestick analysis, especially if you guys are in the Mango C program, will come into play over here. Okay, it'll be very, very useful to combine your candlestick analysis along with your order flow module. The two of those put together is going to be freaking golden for you guys right now, okay? Because it will allow you to chop out the noise and understand what the market participants might actually be doing to draw in the more amateur traders and the stupid money from making mistakes, from people who want to like front run things and letting their emotions get the better of them. Look at this week here. This week was freaking bad, okay? That was a bad candle. You don't need to remember any names of these candles, doji this, doji that. It's all bullshit. You don't need to remember any of the names, okay? You guys know, especially again, I'm going to post a couple of sections from the candlestick analysis module for you guys who are not in the C program, so that way you guys can follow along, at least a couple of them, especially the one where we construct a story, you know, how we use the candlestick to construct a story, and that's all you need. What is this story telling you? You can get a really good story just from this, okay? But what do we look for after that story? All of you who have been watching, what do you look for after the story? We look for that confirmation, correct? That confirmation triggers the move or the trade. Okay, cool. What would be the confirmation over here? Two things. Either us taking the wick low, if you want to get aggressive, again, something we talk about in the examples, in the sections, in the modules. Taking out the wick low if you want to get aggressive and you want to be a short-term trader, right? Short time frame trader. Or you wait for the wick low to get taken out as well as the candle close, right? So wick low is right here. One of the two criteria got activated, guys. We got the wick low getting taken out. We don't have the candle close yet, though, right? But usually, especially on the weekly candle, okay, people are going to expect the wick low getting taken out, look for continuation towards the downside. You're going to hear that from a lot of old school traditional market traders as well. The previous weekly candles low gets taken out, that's a very, very bearish sign. You're going to see shorts getting piled on. Okay, but from painful experience, from me getting wrecked in these markets, the weekly has time and time again been trappy. It's been very, very trappy action. I'll show you guys the biggest trap of the weekly. I mean, there's one right over here, right? This is disgusting. But I'll show you a far more disgusting trap on the weekly time frame that I got caught in. I have a tendency of buying tops here, guys, but I take my losses quickly too, so they don't really end up hurting too much. Look at this, guys, over here. Look at that candle close. This was in the 2019 rally from 3K all the way to 14K. Yeah, I expected continuation after this, man. I expected continuation after this. And around this time, right, I already started feeling very doubtful about playing the weekly because I'd already gotten burned a couple of times. But then this this was it for me. I'm like, that's it, right? That's it. I'm not. Look at the candle that transpired right after. Bull trap, boom, took out the previous, didn't just dump, it dumped with freaking conviction, man. It doesn't give people who are playing the weekly time frame to actually get out of their trade. And the thing is, right, again, if you guys know my philosophy on bull traps and bear traps, all you can really do if you're following your plan is get trapped, right? You don't try to counter that. What you can do, however, is in the long run say, I am not playing that weekly time frame based on these conditions. I am not going to get trapped anymore because it's not a high probability trade, right? That's what you can say. But once you activate your trade, you can't not get trapped. So going back to the situation over here, I know I'm rambling. I do apologize, but that's how I am. I'm sorry. What are we looking for activation on a downside move after taking out the after having such a big fat bearish candle like this? We're looking for the wick low to get taken out. Also, good confirmation is the candle closing underneath the wick low, right? The aggressive move is only waiting for the wick low to get taken out. The confirmation is wick low as well as candle close underneath the wick low. So let's go ahead, and I want you guys to see this. I'm going to go ahead and draw a horizontal right on that wick low there, right on that wick low, okay? Then I'm going to switch on over to the lower time frames on the 1 hour. I actually have not done this. I'm just assuming that's going to work. Okay, cool. It did work out pretty well. Yeah, so you guys can see if I mark out that wick low, which I did with this horizontal, red horizontal right over here, look at the price action around that wick low and look at the volume that came in right after. We essentially, what is that telling you? What's the story there? We tapped that wick low, the previous wick low, drew in all of that short liquidity and immediately bounced up. Okay. Now, is this enough to go all out bullish and look for 100,000? No, it's not, but it's giving you clues as to the mindset of the current market participants right now. There are shenanigans going on. There's a need for liquidity, and it's on the buy side. The need for the liquidity is on the buy side. They put in that order. Now that's not to say that this means it's going to the moon, eh? But clearly, someone wanted liquidity. Tap that liquidity, drew in short sellers, and instead you saw an immediate move towards the upside, right? Now, we don't know how this week is going to transpire, but this is the first thing you look for, guys, for that warning, okay? But like, okay. Let's see what's going on over here. Let's see what's going on over here, right? Even if you are already in a trade and your rules forced you into a trade, I don't use the word force negatively because you should be forced into a trade when your rules activate you into a trade. As a trader, looking for these clues helps you mentally get prepared to take your loss. I was talking to Mark last night, and Mark and the other developer, Shanks, from in regards to the dashboard. We have some cool updates coming up on the dashboard, by the way, guys. And I said, guys, I got to wake up at 5 in the morning tomorrow for the weekly candle close. And Mark asked me, oh, have you made any decisions in regards to that? In regards to the weekly candle close? And I'm like, yeah, I'm likely going to be taking a couple of losses on my altcoins, most likely depending on the candle close. I was already mentally prepared, or rather getting prepared throughout the weekend to take that loss this Monday morning, right? So that's why looking at these things are important, not only through I want to take advantage of making money out of this, but also just mentally getting ready to take your loss. So that way, because what is more painful, guys? What is more painful? You being suddenly shocked that, oh shit, what just happened? Holy shit, Bitcoin's pumping my face at 55,000 and I'm in a short trade. I just lost all my Bitcoin because my entire margin account is liquidated. Or you saying, damn, I'm wrong on this. I'm likely going to be wrong on this. I better be ready to mentally take my loss quickly because this can get bad. And believe me, guys, I have seen people's losses get freaking bad. You know, especially over here, 3K, I legitimately know, if this is not BitMEX, but if you guys go on over to the BitMEX and look for the wick low, okay, the wick low, on this move over here, I know the guy who was the wick low. I literally know, like, he showed me, he shorted that wick low. He's the wick, like, and he now traded again, because he didn't get back in. Like, he kept waiting for, because this move happened so fast. It was this candle here. The move happened so fast that he kept waiting for pullback, kept waiting for pullback, and then he lost that account completely. But I don't want to get into the story, but there was a point where Bitcoin was sitting at around 7,000. He had literally sold all for he's been in the market since around 2014, 2013. He had sold all of his Bitcoin, okay? At least 85% of his Bitcoin at these levels over here, and he kept waiting for a pullback, but Bitcoin ran away from him so fast. And at one point he was like, oh, Bitcoin came down to 7,200, I'm going to wait for it to come back down to 3,000. And he never got back in, right? But that's a little bit of a tangent. My point is, if you're mentally prepared to take your loss and get in, you won't end up in that position. Okay, you won't end up in that position where you're afraid to take your small loss, and that loss could become monumental. So yeah, but just watch out over here, guys. Just watch out, be a little bit careful, because there could be something interesting happening over here. Again, we don't know, right? We don't know. But yeah, I went off on a very, very long tangent. There are a few other things I do want to talk about before I continue. Weekly, monthly, 12-hour stochastics, by the way, something interesting going on over here. Look at the 12-hour hold, this horizontal over here, by the way, guys, lining up perfectly with, well, what we just marked out, right? Stochastics are also crossing. Well, not yet, but they're coming down, bottoming really aggressively compared to this low over here. Yeah, this, again, I wouldn't call this a bullish divergence or anything like that. 4-hour, let's go check out the 4-hour, see what's going on over here. 4-hour stokes have bottomed too, going on over to the upside. You can draw this like this, by the way, okay? You can use the midpoint over here at around 50-ish on your RSI and say, hey, RSI looks like it's kind of double bottoming. If it does break this, you can trade like that and look for a move towards the upside over here. Again, you don't be using that as your primary indicator, but it does add good confluence. Let's look at the 1-hour. Lower time frames, not really telling you much. Again, yeah, not really telling you much. But yeah, do you guys get what I'm talking about over here? The weekly is looking really interesting. We have taken out the previous week's low. Now the question is, do we get the candle close underneath the low? I wouldn't be front running any moves towards the downside until we do get the candle close underneath the wick low, especially considering the reaction we got after taking out that low. Essentially the 1-hour reacting towards the upside and so reacting towards the downside. Okay, so any questions, guys? Any questions? How long have you been streaming? 31 minutes. This was supposed to be a 21 minute stream. So much for that. Okay. Let me see. Took back the Kijun on the 4-hour, says Midi. I don't know about that. Looks like it's retesting the kiss. Am I looking for a high, potential higher low on the weekly? That's a good question. This is how I'm playing it. This is how I'm playing it. I'm waiting for the monthly to close above the 10 SMA, and then I'm going to be looking for a higher low on the weekly, right? Until then, it's just better to play the monthly. Just play the monthly and use that as your basis before you look for a move towards the downside. If we close the weekly above the Kijun, we still have the Tenkin to contend with. I'll start looking for high low on the weekly once we start confirming candles above the monthly 10 SMA, because what you could look for over here is essentially the weekly continue on over to the upside, test the Tenkin and Kijun kiss, right? Because this Kijun and Tenkin are threatening to cross bearish. They're threatening to cross bearish if the weeks go on like this. If the weekly pushes up over here to test the Tenkin and the Kijun, closes even underneath the Tenkin but closes above the monthly 10 SMA, at that point we can look for that higher low somewhere around here maybe, right? And around 38,000, 39,000, and then towards the upside. Again, that would be what I'd be looking for. Again, I don't want to talk about where we get the higher low until I see where the monthly closes. So depending on how the monthly closes, I'm going to be deciding where I bid for the high low, right? Keep in mind, guys, at the moment I am a bit biased because I do have a trade on until we lose the mango dynamic, the 2-day mango dynamic. I'm going to be holding this trade. I'm not talking about my trade over here. I'm talking about how you guys can construct your trades. I'm already in my trade because I got in right over here. As soon as we close above the 2-day dynamic, I got into my trade. I was looking for a pullback to get in my second position, to add to my position, and now I'm in the trade. I'll take my loss as soon as we close underneath the 2-day mango dynamic. I'll get more aggressive on my trade as soon as we close above the bi-weekly dynamic. I've kept my trade very, very simple at the moment because of the amount of noise coming in from different sides of the market, right? So remember, there's a lot of confusion right now on the dashboard, or if you're using multiple time frame analysis, which is why it's really, really imperative to keep your time frame at the back of your mind, right? Make sure that you stick to your time frame. Hey Ken, how's it going, man? I don't think there's anything else that needs discussing. Oh, over here I'll be using the entire juncture of the dynamic. So right here, if we do close underneath 39,436, I'll just be out. Now, that risks me actually getting out on potential support, right over here at around 38,000. But I'll just, so this is how you can look to play it, because the dynamic is giving you edge over your traditional analysis, right? That's essentially what you want to use to your advantage. But you can also, in times of confusion, you can use that confusion to your advantage. And let me clarify over here, because sometimes you're going to see that, hey, my invalidation point is here, but there's the 21 EMA coming in right underneath me now, because what often happens is you'll say, I'm going to get out if price closes underneath over here, and at the time when you set that invalidation, your 21 EMA for your asset is somewhere around here, right? But now price is moving, and your 21 EMA comes up over here, somewhere around here. Okay, so what do you do? What do you do if price comes and closes underneath your level, but on the 21 EMA? You're like, oh shit, should I stay? No, you should get out. Period, get out. You can get back into the trade based on your 21 EMA trade, but your 21 EMA was not the foundation of your trade, right? You take your loss and get out and get back in, because essentially the same thing, but at least mentally you are playing it properly as a trader. What you can do, however, is that now your 21 EMA is your opportunity to look, and don't hold too long though looking for this, look for a bounce to your resistance line, right? your support initially, now turned resistance because you close underneath it. Look for the bounce to your resistance line to get out on break even minus your costs, right? Costs of actually putting on your trade. So that's what you can look for. But that's how you use the confusion to your advantage. You're like, okay, there's support underneath, but that doesn't mean I'm going to stay in the trade. I'm just going to use it to get out. Alrighty. So I hope you guys enjoyed this video. If you guys did, leave a comment underneath. Let us know. And if this is well received, I'll go ahead and do more of these streams where I do a quick video overview of my thoughts in a 25-minute to 30-minute stream. Cheers, Amiti. If you guys did like the video, make sure you hit the like and have a great Valentine's Day.